How I would trade Tesla TSLA this week. What's up, traders? Today I'm breaking down a trade setup on Tesla TSLA based on where the stock is right now, support, resistance, entry, exit, risk reward, everything. If you want trade ideas with real numbers, stick around. Current Tesla snapshot. As of September 12, 2025, Tesla is trading around $395.94 per share, having just broken out past key resistance levels. Yesterday's close was roughly $368.81, so it's had a strong move. That breakout suggests momentum is building. But breakouts can fake out, so we need a plan. Defining support and resistance. First, support. It looks like the prior resistance at $370 now becomes near-term support. On the upside, resistance may be at the psychological level of $420, and then up to $450 if momentum holds. So, key range to watch is entering near support and targeting those resistance zones. Trade strategy, options versus stocks. Here are two ways to trade this setup. Option trade version, buy a call option on TSLA, say strike $400, with expiration about 1 month out, e.g. October 2025. Premium might be higher, maybe around 2025, depending on volatility. Delta of that call might be L 0.40, 0.50, i.e., for each $1 move in TSLA, option moves 0.40, $0.50. Time decay, theta, will work against you, but because you're not extremely far OTM, you get more sensitivity. Stock version, buy TSLA shares near $370, $380 with stop loss slightly below $350 in case breakout fails. Target sell at $420 or higher, depending on how momentum plays out. Compare risk. Buying the stock costs more capital, less leverage. Option costs less upfront, more leverage, but more risk, theta, implied volatility, etc. Risk and reward scenarios, let's run numbers. Scenario A. Buy one TSLA $400 call expiring in 4 to 4 weeks. Suppose premium is $25, cost $2,500, since each contract controls 100 shares. If TSLA moves from $395, $420, a 25 move, with a delta of 0.45, option might increase by about $11, $12 per dollar move. 0.45 x $25 move, giving $100, $200 profit minus premiums and decay. Scenario B, buy 10 shares at $375, costs $3,750. If stock rises to $420, that's a gain of 45 x $10, or $450 profit. So option gives higher potential return but also greater risk. If TSLA drops instead, for instance to $350, options lose value faster. Stock loses dollar for dollar, trade execution plan. Here's how I'd actually enter this trade. 1. Wait for a pullback into $370, $308 as support. If price closes around there with bullish candles, that's my entry signal. 2. If using options, buy the $400 call, October expiration. Limit order to avoid overpaying. High. Set stop loss or mental stop. For stock, maybe $350 or about toward 10% from entry. For option, maybe sell if premium drops by 50% or if price action breaks below support. 4. Take profit targets. First near 420, second around 450, or scale out if momentum's strong. Throughout, monitor implied volatility. If it's high, premiums are expensive. If low, better chance to get a bargain. What could go wrong? Adjustments risks. Breakout fails. Price drops back below $370, stop loss hit. Time decay for option eats you alive if TSLA moves slowly. Market-wide news risk, interest rates, inflation, could pull tech down even if TSLA looks strong. Adjustments. If TSLA surges past $420 on strong volume, lock in partial profits. If volatility contracts too much after buying call, consider selling or hedging with put spread. Use smaller position size if risk feels high. So to recap, TSLA is breaking out. Support, Kaumai's $368, $370 now becomes key. Two potential trade types, option or stock, each with pros, cons. Enter near support, target resistance, and manage risk tightly. Be prepared for what might go wrong. If you liked this breakdown, hit that like button, share in the comments what ticker you want me to cover next, and make sure you subscribe so you don't miss future case studies like this. I'll catch you in the next video.